How's everyone getting on?
Hello everyone, can you guys hear me?
Yeah, good.
Everyone else can hear me?
Yeah.
Happy New Year, everybody. Obviously, this is the first team call that we're doing in 2022. Obviously, I don't think it was appropriate to do any team calls after the 22nd, really, because I think everyone needed a break. So, yeah, apologies if you were expecting some sort of education to happen in the last week or so. Obviously, I think it's the only time we take off in the year. And I think it was a good time to kind of recenter yourselves, take some break, have some time away from the charts. I know we did trade. I mean, we traded throughout December anyway, so it's not like we weren't hitting trades. But obviously, we need to find more of a balance this year as a team because, again, guys, opportunities will be there on the team, and time to kick on really. So I'll wait for more. I'll give I think 2 or 3 more minutes for people to join. I think we have a lot to discuss anyway, in terms of what's happening on the markets at the moment. Obviously, again, it wasn't the cleanest day today on the markets. I've been quite distracted. I've had a few meetings here and there, so but that's okay. Every time you have a day like this where things don't quite work out or you misread the market, I think it's good to recenter yourself, recalibrate what your trading plan is, go back over your methodology and look, how are you actually taking the trades. And actually, the gold sell wasn't that hard to get if we were a bit more locked in. But I'll go over the gold sell and how we could have got it because it's the same principles in play, really. And the more you practice those things, the more you can react to those things in real time as they're developing. And that's all the markets really is just how, if you have the ability to react in that moment appropriately to what's the information that's being presented to you. So I think I'll give it 2 or 3 more minutes for people to join. So it's an okay turnout. I know Aaron set up the new educational platform for you guys. So going forwards, all team calls will be uploaded there in case you miss one, so you can catch up on it. I think that's a good idea. Obviously, that again requires a bit of respect from both sides, that the link is not shared. Even if the link is not shared, Aaron can moderate it. He can see who signed up and how much of the videos you've seen, etc., etc. So, guys, I will be recording, and I think not this month. It probably won't happen this month, but probably in end of January, going into February, I'll re-record some of the content because a lot of that content is kind of not old methodology. It's core, but it's core from early on last year. It's not really kind of representing the style that the trading has taken on in the last part of 2021. So I will record some new content and we'll be able to see who's gone through the material. Obviously, you need to go through the material because actually team calls are about more advanced concepts, putting things together, piecing those concepts together. It's not really a time where I want to go over what an order block is or what an IFC candle is or what an imbalance is, all those core ideas you should already have nailed. How does that sound to everyone? Okay, just like every team call today, I'll open up the floor to you guys to ask what you guys want to discuss on the team call. Obviously, I have some sort of idea about the direction I want to take this team call, so I'll open the floor before I share the screen with you guys.
Even before you do that, not to put anyone on the spot, is anyone kind of new to the community? Just want to obviously wish you a warm welcome. Maybe if you want to just introduce yourself, your trading background, or you don't have to, but yeah, it'd be good to kind of actually speak to some of you, because I think there's a few new members on the call. Okay, maybe not. So yeah, guys.
No. Maybe not then.
Hello.
Hey, how are you?
I'm good. It's a bit late, so I'm in Norway.
No, Ben, right? Ben.
Yes,
Ben.
me. Yeah, Bendik.
Okay.
Yeah, I just joined.
Anything in particular? Maybe you're struggling with, or you're quite new to the team.
I am actually funded, but I'm trying to get better trading. But I'm making some money right now. So
yeah, that's good, man. That's good. you're in a good place.
Yeah. So I'm gonna receive my second payout on Thursday. So
oh, great. Yeah, I mean, anything
But-
that maybe you've seen, you kind of from the charts that you may want to kind of talk about today?
I haven't been too active today because
Okay.
I haven't had access to my desktop. So
Yeah.
Yeah.
No worries. I mean, this can just be a
but
kind of
on some later team calls, I will probably be a bit more active
Yeah.
on that front, but it doesn't fit at this time.
nice to meet you anyway.
Yeah, nice to meet you all.
Anyone else? So anyone will have any things they want to discuss, like they want to ask me or go over this call specifically? Any questions, any topics?
Just gold, to be honest.
Just gold. Is there anything specific?
Mostly just the sell from today.
Well, truth be told, guys, obviously we've had a bit of a break. I'm not going to be in the most. I mean, I know I hit some nice trades with Bitcoin and this, that, and the other, but obviously getting back into rhythm once you've had a bit of time off, it's going to take some time just to recalibrate your mind to sharpen that focus. But we will get there. So, in terms of gold, obviously you guys know and I hope you guys reviewed the team call from last week. I broke down extensively, right, why gold didn't go and hit that POI at 1760 because the 4-hour structure here externally was building a downtrend, right? Lower highs and lower lows. And I told you guys it's very important because I hadn't done it last night. And you can see the result of that. You won't be able to trade correctly. You need to, not as well as tag your structure points in red dots, you need to actually write down which time frame is presenting the structural points. Obviously going into 1750, we had the 4-hour time frame building lower highs and lower lows. And of course, from a theoretical standpoint, the market supposedly should always come back into external. It should come back into external structure. However, last team call, I have focused heavily on not just looking at the structure and which time frame is breaking, but also looking at the nature of how price breaks through that previous structural high. So you can clearly see, and on that call we highlighted this specific candle, and what we really discussed was, is price breaking through with clean intention, or is it wicking through, right? And you can clearly see that on the 2-hour, 1 hour, and 4-hour time frames in particular, those are the time frames you want to assess how structure is breaking through. You can see that the 4-hour structure here broke quite convincingly. That really was the first clue that price wasn't really going to return into your deeper 1758 POI. Okay. And obviously we broke down even in this segment on that call. You should review that call. This is very important because this POI over here was not easy to pick because there's POIs over here anyway, right? So what was your approach going to be in order to pick out this point of interest here? Obviously this zone over here is a key area of institutional activity, because just look at the candles that are built in this area alone. You've got strong institutional candles to the downside and upside, and obviously the resulting momentum candle that took it through. And obviously you guys know, if you don't know, the criteria for your points of interest is very specific, right? If you want to have precision in the market, right? I've not been the most precise today, truth be told, but that's because I've been distracted. But if you want to have precision in the market, you've got to have specific criteria. So the criteria for your POI, remember, 3 of those criteria are your filtration criteria. The final one is that precision criteria, right? So there's 4 criteria for your POI. Number 1, what's criteria number 1? You're looking for the last sell to buy zone, which causes a shift in the previous structure point. So obviously the previous 4-hour structure point is right here, right? You're finding the last sell to buy zone. So that becomes this zone here. Okay, that becomes that candle here. Okay, so that's number 1. Number 2, your POI has to be free of liquidity and has to have liquidity coming into it. Okay, so number 1 is the last sell to buy zone that causes a BOS. Number 2, your POI has to be free of liquidity. So what that means is you can clearly see this candle here, this institutional candle here is not sitting on equal lows or equal highs. It's free of liquidity, right? And obviously you've got liquidity coming into that POI. So what kind of liquidity you get? You've got equal lows sitting here. You've got trend line liquidity sitting here. You've got more equal lows building. So clearly you've got liquidity being captured into your POI, okay? Number three, this specifies your criteria even more, is that your POI has to be below the flip zone. The flip zone is just an area where most market participants are stepping into the market because it's an area of support and resistance. So you can clearly see above the zone over here, you've got what? Resistance, resistance, resistance. You've got support here. So again, support, support. So clearly this zone here, the market participants are looking at this zone as a key area of where they should be stepping in for buys. And you can see clearly around this area here, you have a reaction happening at the flips. And so this reaction here is normal retail market participants stepping in, okay? That means any POI above this zone over here, like this one over here, that one is not valid. And therefore the only valid POI was this one right here, okay? Now the final criteria why price didn't really tap into that zone is all to do with that final precision criteria. Is the true area where the banks are sitting within the zone is you have to find the last area of liquidity left of the POI, which that candle captured. And you can see when the bank stepped in here, they caused liquidation. They took stop losses off these candles here. And guess where price tapped into the last points of area where liquidity was taken. This already was the fuel to go and shift that high. And that's your precision criteria number one. So just to recap on the POI, does everyone understand that or not? Is everyone clear on that or not? The criteria of POIs. Anyone? Guys, you're gonna have to speak to me because I can't move on to the next topic unless we're clear about the 4 criteria of refining your points of interest. Are we all clear? Can you guys write on the chat? Are you guys clear or not?
Yeah.
Everyone else, new guys clear? Points of interest criteria. Again, if you go on the last team call, went through this criteria in detail. And the same criteria is written on the same breakdown on that dollar index. So you can clearly see where we're aiming for dollar index. The last sell to buy candle, which shifted external structure. You've got a flip zone here. So you've got an area of support resistance where normal traders will be looking to step in. You've got liquidity sitting here. You've got trend line liquidity all across here. And this is the area where that candle took liquidity loss, and therefore 93.36 becomes that most precise area where price is going to be magnetized to, right? And you can clearly see all that. You have this chart on the page anyway, right? So price came down, hit 1786, and we clearly shifted. And what's going on there? We went on to, we gradually continued to shift here. 1820 was a key zone, and you know this, that I was looking for this zone for a long time. The price hit to. The reason why 1820 was a key zone is if you look at this, the architecture of what's going on in this region, right? You've got previously some sort of last sell to buy block over here, which is broken through extensively with force, with momentum, right? What's sitting across here? You've got that hidden FU candle, because again, on a lower time frame over here, if you were to zoom into 1820, you can clearly see you've got an area of supply in the market, which price went and tapped into, right? At the same time, price was doing what? It was building that internal architecture going up and up. And what you have to track here is when price is building this internal architecture, which time frame is presenting this point in time right here. So obviously at this point in time, H1 was bullish. When price cleared that structural point over here, H4 became bullish. And that's why I wasn't really looking for price to come down here any longer. Number one, because of the previous shift of that 4-hour lower high, which was very strong. And then you've got subsequent shifting of that previous high over here to go and create a H4 higher high, okay? Now, obviously there was a sell to be had here, which we didn't take, but that's fine. And obviously price then came back into 1790 to go and shift this previous high over here, okay? And I think, when did we get into, we took trades here last week, I think, on both of these points of segments of price action. Again, tricky bit of architecture to depict them. Trading at the moment has been quite difficult. It's not the most cleanest because they are throwing tricks at you. But again, if you look at this section of price action here, right, where price is magnetized to this zone, you can clearly see, what do you see? This last sell to buy zone over here, right? You clearly have in this area over here, what's this sitting across here? You've got an area of key support and resistance where retail traders are looking at it. And therefore, this zone, this institutional zone is below the flip zone number 2, number 1 last sell to buy zone, which caused the break of structure of that H1 point in time over there. And obviously, the more refined zone is where it takes liquidity left of that POI and we tap into that zone quite nicely. Okay. Also, as a psychological level as well, 1790, you've got psychological pressure coming in from people trying to step in at the 1790 plane. Now we took buys up here. Okay. There was a possibility at 1820 where we could have sold off and price could have. That's why in that period of time, I was watching and I sent that sell idea out because there was a possibility, because actually when price is coming up here and bringing that internal flow here, it was making up H1 higher highs internal, right? Internal higher highs. And when it goes up here and it breaks through that H1 internal plane, the market shifted from H1 bullish to bearish. So this zone, when price comes back here, is a key zone to watch in case you have that shifting in order flow and price decides to crash. You have to be prepared for both sides of the market, right? And that did begin to happen, however, it didn't play out fully. But in any case, the smart way would have been to deal with this problem is, if you're in buys here, would have been to hedge the sells, right? Which we didn't do, but that's fine. Even if we got into the sells, and I think it gave a 50 pip or 40 pip reaction, you have to be prepared. If this zone breaks, you have to be prepared, depending on the nature of the break, right? And you can see on Friday, I think this was on Friday, when that sell idea collapsed, either you broke even or you hit stop loss, right? If you then look at the subsequent break through that zone, how did price break through that zone? It broke through it with considerable force, okay? That tells you that any subsequent retest, right, is going to be a mitigation play to continue. And that was the last entry on Friday that was sent. So even though, yes, you were in buys from, I don't know, somewhere here, right? And you were up 200 pips and you closed profits, took sales. Even if your idea collapses here, you have to be prepared as a trader of what's going to happen next, right? You can't, and this is where most beginner traders go wrong. They think, okay, they forget, first of all, you've hit a beautiful trade for 200 pips, even though your idea collapses here, and it wasn't a bad trade to take, because actually when I refined it, that dropped right on the pipette from that zone here. You have to be prepared of what's to come next. You can't be thinking, oh my God, it's the end of the world, that the trade has fallen apart, okay? And obviously, when it broke through the momentum, it literally simply mitigated. It came back and mitigated that block over here, right? So when it came back down on Friday and it was mitigating this block over here, obviously, when price breaks through here, you've got internal bearish trend building down here, right? You can clearly see you've got these blocks are mitigating lower. And once price breaks through here and breaks across here, the entry was here. And obviously, we hit that nice trade to the highs. Now, the mistake I made, and this is the mistake most people will make once they get into a trade, you forget to track how structure is building, right? As new data is being presented, okay? So when price has gone on to now, go and clear that 4-hour higher high, you need to track which time frame, just like the analysis we did on this leg and that leg, you need to track which time frame is presenting this point in time, right? Is it 4 hour? Is it 2 hour or whatever? So you cycle through the time frames and you can clearly see, well, yeah, you could say that's 2 hour structure, right? So let's keep going. Is it 4? Yeah, it very well could be 4 hour, right? But you want to take the highest time frame that it calibrates to. So on the 8 hour, 12 hour, you can clearly see clear visible structures, right? So if I keep going up, 16 hours is okay, 20 hours, but when you really get to the daily, you can't really make out the structure very clearly, right? So this is probably an 8 hour, 12 hour, 20 hour landmark, right? It's significant. So it means now that these timeframes, your intermediate timeframes, are really significantly The bulls are really in control here, okay? Now, this diagram, we need to go back into, it's the key to the whole game, because when a new high gets created, the reason why we have that sell-off happening like we have today is all to do with the psychology of the market and market participants, and the same thing was in play when we got caught on the wrong side of the market today. So what essentially happens, and that diagram states it clearly over here, if you look at it, is when a new structural high gets created, the reason why you get that dynamic collapse in prices, because late into the trend, and obviously at this point in time, the market has been moving up how many pips from the previous structural high? It's moved up almost, I mean, 300-400 pips, right? So we can all agree that's a significant bullish pressure, right? Eventually, they're going to have to come back down. The reason for that is in order to pick up more fuel or more liquidity, hunt more stop losses so they can continue the expansion further on, right? So what happens here is you get impulsive buying late into the trend, and I later marked this on my diagram, you can clearly see here. And this is why it's important to label, right, the external and the internal architecture that's building this 12-hour, 20-hour higher high, right? You can clearly see you've got an external landmark here. Would everyone agree? On a 5-minute time frame, right? This is a 5-minute higher high, higher low, right? In order to get the next structural point over here, you've got some sort of internal trend building here. Can everyone see this? Yeah, these are all 10-minute points in time right here, right? You've got a 10-minute internal higher high, 10-minute internal higher high, 10-minute internal higher high, 10-minute internal higher high, which is also now that 8-hour, 12-hour, 16-hour point in time, okay? Now, if I go slightly lower, you'll see this. When this bit of the block was building, this is that consolidation. This is very important, right? Because when this consolidation swipes up, it means still you have a bullish market dynamic, right? So what should price do here? If it was going to continue higher, right, what should price do here? Price should come and respect this last sell to buy zone. And guess what? It should literally come up here, and like it was given a reaction here, and guess what price should do? Price should shift up and try and break that high. However, what happens instead? What happens instead? You've got a change in character, and that's what a change in character is. A change in character is nothing to do with, okay, it's just a 5-minute break. It's not. It's actually a shift in the direction of mitigation, right? Or the institutional intention telling you we're actually no longer interested in going to the upside, and potentially sells are in play, okay? But most change of characters have that kind of, that typical kind of consolidation block. So it's the liquidation to the upside and the liquidation to the downside, which is now signifying that shift in that market dynamic. Obviously, the market opener had marked out the Sydney high and low. The Sydney low got liquidated. That's why that trade was sent. So, but obviously, I wasn't tracking the internal structure, and that's why you need to track it, because again, the same thing happens now. Is that diagram demonstrates? This diagram is the key. The reason why you get that initial collapse is because what are people trying to do at this POI over here? They're trying to buy this POI because they're so late in the trend. Because what do they see? They have that emotion of fear of missing out, which causes price to change character. Okay. Now, if you don't realize at that moment, like I didn't, right, last night, plus it's late, so in the start of the week, so it's a multitude of reasons why you don't recognize that simple fact. Number one reason is you might be a better buy-sided trader than a sell-sided trader, right? That still might not be a more kind of easier approach for you in the market anyway. But if you don't recognize that's going on, what you'll end up trying to do, and this is the common mistake, you'll end up trying to buy every POI along from what you perceive as external structure here, right? If I highlight, you'll perceive this as the external landmarks here, okay? Because that's where the last shift was in order to create this high. You'll try and buy every POI, not recognizing that actually we've caused a change of character here at a higher time frame supply zone, which I'll show you guys in a second. And actually the market's ready. If you don't recognize it here, right? Once this breaks down here, you should definitely recognize actually the 15-minute time frame has done what? Or the 10-minute time frame has done what? You've got a 10-minute, you've got a 5-minute change of character here. Now the market is shifted into a 5-minute bearish or 10-minute bearish market dynamic, and now what are you starting to do? You're starting to build lower highs and lower lows. Are you not? Yeah, is that not what's going on? And you can see each one of these POIs, people are trying to buy the move, or realizing actually the market has shifted into a bearish market dynamic, and that's very important. And that's all to do with the psychology of what really drives a sell at the highs of a leg, right? Is that fear of missing out. It really is. Yeah, there's other characteristics in this zone here which obviously happen when a new high gets created, and I'll talk about the new models of price delivery in a minute, right? First of all, what you should do is look for the building up of liquidity around that zone. So if you see over here, what do these two candles here see? And the problem here is when you're rusty and you haven't been on the charts that much because you've had some time off, all of these details you'll miss in real time, right? And because the market is detail orientated. So what have you got here? You've got equal highs, and that's why it's important to flick through your time frame, because on the 5-minute time frame, this looks like a clean candle. A clean FU candle, by the way, will be a clean FU candle on every time frame. It won't show equal high, relatively equal high structure. And even this candle over here, you can see you've got building up of that internal liquidity around your zone, right? So this is what we call pre-phase 2A. This is the pre-phase 2A going into 2. So you're putting, I'll use the car analogy in the last team call, you're putting the clutch, right? So when price is shifting its direction, right, you're assessing for the specific characteristics of price which make you believe that a sell-off is going to happen, or a buy, or in the opposite case, buying will occur. Okay, that's all you're looking for. You're trying to rationalize the sell or the buy based on specific behaviors of price at the highs or the lows, right? And if you can see specific things happening, it adds to the probability that the sell or the buy is going to happen. Nothing is guaranteed in this game, right? Obviously, from a higher time frame perspective, I don't really like trading imbalances, but again, we have to agree that there are areas of supply and demand in the market, right? And obviously, the market from 1790 to 1830 has gone up almost 400 pips. And it's coming into an area, I think it's around 50%. This is a clean 50% kind of hit into that kind of supply and demand zone. So there is supply sitting here, okay? It's not always, like, imbalances like these aren't always the strongest areas of supply and demand in the market, but these areas can become the frame, the anchor for the shifts, right? Or the corrective levels. That's just the fact that sometimes it happens. But what we all have to get better at understanding is what are the behaviors of price that we look for which justify that a trade is setting up for a sell or buy. That's what I'm really talking about, right? So forget the naming of the phases for now. I think that's a bit complex and I'll go into it. But one of the first characteristics you want to see before you can rationalize, right, if a sell or buy is happening. And the same thing I said on the team call last time when we were in buys from, where were we? We were in buys over here, and price was progressing through 1790 all the way, which yeah, this area here, when we were watching this in real time, I said, when price was here, does it look like it's presenting any characteristics that actually a turn that this POI is going to happen? It wasn't really. When price was here, it wasn't really building any liquidity. It hadn't really changed character. It wasn't doing any of the behaviors I'm going to describe at the moment, which you can justify in your mind, set up a sell idea in play. Okay, so that's what you're really trying to do and understand the market. Once you understand actually, and you tap into the psychology of what actually happens at the highs and lows, the same principles that are in play here, right, with the fear of missing out, etc., will be in play right at the bottom of here, because guess what? When price is progressing through its trend, what are people feeling? Fear of missing out right at the bottom. That emotion of fear of missing out is what drives the directional change at the highs and lows of a trend, right? That's just how the nature of the market is. It's because the market is being moved by market participants' interaction. But one of the first things you look for or the characteristic that you have to look for when price is hitting into your area of supply and demand, in this case, 50% of the imbalances, you need to see internal liquidity being created into your POI and grab So you can see over here, you've got more internal liquidity being created. Yeah, it's kind of indicating to you that something's about to occur. It's not telling you that you take the sell right now, right? It's all a pre-indicator to what's about to unfold. You guys follow me so far? Or not? You guys follow me? Yes or no?
Yes.
Yeah, so you really want to just understand when you take a trade for a sell or buy, what are the behaviors you look for before a viable trade idea sets up, okay? So number one, you have to look for that liquidity, that buildup of internal liquidity, okay? Why would they generate liquidity if they weren't going to switch the market? Because liquidity is the driver that takes out stop losses and shifts the market dynamic to the other side. Number two, you have to see that change of character, okay? And in order to see what's, if prices change character correctly, you have to be able to understand how the structure is building as it's building its final impulse into the high, okay? Yeah, you guys follow me so far? Or not? Yeah.
Yeah.
So over here, you can clearly see, obviously, you have some sort of external point here, okay? In order to build this point, you had internal downtrend. Everyone agree with that? Yeah. Now, in order to build the next high, you've got internal market structure building right here, okay? So you got an internal 10-minute higher high, internal 10-minute higher low, internal 10-minute higher high. So what should have this last sell to buy zone done? It should have, as I showcased, it should have held price and shifted it higher if the intention was true, right? However, it broke it down, okay? That's that change of character, right? So this is what we call pre-phase two. This is phase two, right? But this is essentially putting the clutch in your car, right? This is changing the gear, right? So it's changing the intention. And then when price comes here and mitigates, all it did was mitigate 50% of that block, right? And obviously the liquidity pool that would have been left of it, you get that dramatic collapse, okay? If you want to confirm it, yeah, if you want to confirm whether the entry here was actually viable, well, obviously this leg over here, when it's building, right, into this zone here, it's going to have its own trend, isn't it? Right, and I'll demonstrate that idea when I talk about dollar index in a minute, but it's going to have its own trend. It's going to have its uptrend, which is actually creating that lower high impulse. Once this breaks down here, you obviously know the internal architecture of this leg has just shifted, right? And then you're assessing for the nature of the break. And you can see you've got a very strong impulsive, you've got momentum. If you look at, and this is why it's important to use is cross time analysis, right? Because actually on 3 minute, you can't appreciate the strength at which this broke through at around 1:30 last night. But if you look at the 10-minute time frame, you can see the force with that internal architecture broke, and it broke through with significant force. And that's why the subsequent testing, once you have a significant break of structure like this, just on a higher time frame that was showcased on gold here, you're not going to get testing of deeper zones, right? Price is just going to come and mitigate these wicks here, right? And that happens quite frequently. And then you've got gradual flow building across here. Okay. Yeah. You guys follow that thought process so far? Yeah. Now what you have to realize is, right, that once this process happens at the high of a trend, right, you're no longer trading the external structure, right? What I mean by that is you're no longer trading the external push from 1790 to create a new high. You're actually trading, you're actually an internal trend, right? The market is actually trending and is respecting the internal trend, okay? Remember, the market's always in opposition of two views. It's always either trending based on what the external trend is or trending based on what the internal trend is. Obviously, the external trend is what on gold currently. It's bullish, isn't it? Yeah, it's creating higher highs and higher lows, isn't it? Yeah, we got a bullish external trend, right? However, in order to make the higher low points in time, the market at some point is going to trend in a downtrend. Yeah, that's how the higher low like legs are created, aren't they? Yeah. So in order to create those legs over here, that's the process that goes on at the highs at every kind of structural cycle. Yeah. Yeah. From a liquidity standpoint, from a monthly timing standpoint, of course, we're expecting a bullish month. So price has to do what? It has to go and create the tail of the month, right? So if prices opened at 11 o'clock over here, I think the opening price is here, right? That's the open, right? In order to create the low of the month, is for a bullish month, is going to go and create the low of the month first, right? So you've got the opening price, right? Then it's going to go and create the tail, which is the low of the month, right? Then it will go and create the high of the month, and then price will close somewhere. That's how a bullish month unfolds, right? And that's the sequence of events that's going on. Yeah. You guys follow me so far, right? In order to work out where price is going to be magnetized to now, what you got to realize is price is in some sort of internal trend flow. You have to pick out the POI that it's going to go to. And that's basically based on the criteria, the four-step criteria of filtering your points of interest. So number one, right? The first thing you have to, and what wasn't labeled on my diagram, is what you have to do. And again, this will be the same situation when gold does break past 1830 now, 1813, right? And if it does, and I think it will break past these zones anyway, but 1860 is the next one for me. Once it does do this behavior and it does go and shift a new high, right? What you got to realize is you can't get too excited like most of us do, even myself, and forget to be an analyst. You got to understand, right? When price is building, and it's not going to build it in a straight one line impulse, right? What's going to happen to build that kind of this? It's going to create some sort of trend like this, right? You have to understand these landmarks over here are all internal structure, right? The external structures are going to be right here to right here somewhere, right? Which time frame is presenting that point in time, right? Currently, we've all agreed that this point in time over here is like an 8-hour, 12-hour, 16-hour POI. It's not really daily yet, right? The next one that will build here will be a daily, right? That's just how price progresses. So if you go on the certain videos, I think even the last team call I mentioned this, how structure progresses through time is not just going to create a daily point in structure when it's at the bottom of a new shift cycle, right? It's going to first, in this case, it did 4 hour, right? Or 1 hour, right? Then it's going to create 4 hour. Then it's going to create 8 hour. Then it's going to create daily structural points, right? Then it can knock out that weekly structural point. That's how time cycles, right? So when price then eventually does go up here, what we have to do is mark out that point in time, right? The same process I described over here, by the way, happened here, right? When the sell-off happened. But you have to recognize that once you have extreme moves happening, you will have psychological fear of missing out at the highs of trends, which will cause that dynamic, which causes that process to happen, right? That building up of liquidity, right? That change of character, right? That shift from the relatively bullish internal architecture into a bearish market dynamic, right? And then you get that progressive order flow, right? You have to realize what's driving this change in the market are market participants and then feeling the fear of missing out. Yeah. This is still one of the hardest skills for me, like, because it's not natural for me because I'm a better buy-sided trader than a sell-sided trader, as I think most people know on the team. But if you recognize that, and it's all about awareness in the markets, right? You're better at dealing with those situations. Okay. So in order, and the reason why, again, why I started looking for buys here. I mean, there's two possibilities here, right? If you don't recognize actually the markets is in an 8-hour bullish market dynamic right now, it doesn't really have any sense in dropping all the way down here. It doesn't really, right? Because you've got progressive structural cycle, the market's cycling quite nicely over here, right? 1 hour high, higher, higher, low, 4 hour higher, high, higher, low, 8 hour higher, high, higher, low. There is a possibility it could come here, right? And that's why you correlate your trading with your index analysis, because your index analysis will give you a clue of whether price is ready to move right now or not. This structural analysis, if I go through it right now, I'll go through it in a minute, will summarize again, actually how complicated structure is and the interplay, but in actually working out, right, if you've now made the 8-hour higher high, where the 8-hour higher low is going to come, that's all to do with understanding your 4 points or 4 criteria as it pertains to your point of interest. So what are they? So number one, you're going to have to find the last swap. And again, if your chart is marked like mine, right, it can be easy to overlook things. And that's why it's good to put this thing on here, kind of get a clean slate because you're trying to find a new POI. Okay. And again, why does price collapse so dramatically through these zones? It collapses for twofold reason. Number one, you've got a bunch of liquidity. Look, Asia low sitting here, right? Equal lows. In the moment, these things are hot, like they're core concepts, but you'll forget them, right? We all do, right? You got trend line liquidity sitting across there. You got equal low sitting across there. The reason why you get this such a dramatic collapse is number one, liquidity. Number two, people are keep buying each one of these POIs. Okay, so one tip: if you ever are in the wrong side of the market, right? Like when I sent this trade out yesterday, and obviously it broke even, I just left it, right? Because I wasn't sure, right? It's okay to not be sure in the moment because we all forget the way we trade, etc. Right? You need to just let the market play out, right? That will save your account. It's particularly when you're in the high of a trend, it can be so catastrophic, and I've been there, that you try and buy every POI. Yeah, that's really going to be futile, right? If you let the market play out, you'll eventually figure out actually what's going on is that actually you made a new 8-hour higher high, and actually we're coming down to make its appropriate higher low in order to get that trend continuation. And also the second fact being supported by the fact that we're in a new monthly cycle in 3rd of January, right? We're expecting a bullish month and we want to create the low of the month first before we go and create the high of the month. Okay, that's all that was going on. And that was another reason why potentially I was looking for sales at an 1820, because I was thinking they might actually go and print the low of the month for January over here and then go and shift and make high. That was another rationale why I was looking for sell-offs here anyway, in any case, right? So liquidity and people stepping into the market here is what causes this dramatic collapse in price action, right? Now, a consequence of this is it's quite beautiful how they set up the next move, because if you look over here, right, what does this look like to the whole world now? It looks like actually lower low, lower high, lower low. So when price comes eventually revisits 1827, what will people try and do? They will short this POI. Yeah, they'll try and do this, right? Which will be the perfect catalyst for price to do what? Actually end up breaking these zones, right? And also aided by the fact that you've got now clean Asia high sitting here, right? So the consequence of this internal trend, right? It's twofold. It not only takes out the buyers that were coming in or the late buyers into the trend, it also sets up the future move when the buyers do come. We have to realize now, price, when it shifts over here, and I'll go into the entry protocol here, is no longer interested in trading this internal downtrend. Is actually going to trade what? The external trend now. Yeah, that's the key. That's the key in trading. When you have to realize, are you in any given moment in time, is price trading the internal architecture or is it trading the external architecture? That's all it is. Yeah. If you can recognize that, you'll know the direction of the market. Yeah. The same thing happened on dollar index, by the way. It broke down these internal structure points here, right? This collapse over here. What has it done today? It's come back into external structure. And so the internal structure is bullish because it's creating the next lower high. And now it's going to continue trading the external structure now. The external landmarks are where? Yeah, it's gonna continue trading that external architecture, right? That's all you have to realize. Are you trading the internal architecture or are you trading the external architecture? Obviously, the way you get the trade here, I know we didn't take it, but that's okay, right? You learn from these things. It's the same sequence of events. The same sequence of events that drove the sell-off here, the same sequence of events that drove the sell-off here is the same characteristic behavior of price action, right? At the bottom of here, when prices come back into external structure, what are people feeling? Fear of missing out on the sells. So what do they start doing? They start impulsively trying to sell at the lows. And guess what causes that to happen? that causes price to shift from, and this is where you've got to be very important about highlighting, right? And this is why we kind of go into order flow, but it causes that shift. If price was to continue going lower, by the way, it would have just respected that block here. And what it would have done is done this, okay? You can clearly see, right? Price is going down here, right? If price was going to continue going lower, what would have happened when price arrived at this block? It would have hit it and price would have done this, right? Price would have continued going lower. But actually what happens here? The order flow shifts, right? So this is what we call the external order flow break, right? This is that shifting of that external architecture, okay? The reason for that is because people are trying to sell late into the trend, yeah? So you got building of order flow here again, yeah? Now, you've got to monitor the blocks over here, right? So when this breaks down over here, you've eventually got the what? The internal order flow break. There we go, right? So you can see over here, price creates this last buy to sell zone, buy to sell zone. This one gets respected and then this one breaks through. So you've got now external shift of order flow, internal shift of order flow, right? So that's telling you something, right? That's telling you that, and again, the same characteristic here is in play. Have you got building up of liquidity going into your POI? Well, yeah, you do. Look, you got equal lows here. Yeah, you got a bunch of liquidity being built, right? You can even argue that these candles are relatively equal lows and you've got liquidity being captured, right? So it is fulfilling the same thing. If I flip it upside down, that happened on the sell side is happening here, isn't it? Yeah. Number two, you've got that change of character right here. Yeah. So once that changes character, you're looking for that order flow idea, right? So you got the external shift over here. You got the internal break here. Let's take it forwards, right? So price comes down here with flow, okay? Once you break through there, that's the final break of flow over the final break of order flow, right? So you're looking for 3 shifts of order flow. The optimal entry was here. I was actually napping when this happened, but the optimal entry here is now here. And if you zoom into this section, and again, this goes into your anatomy of an impulse, right? The anatomy of any impulse is the same, right? Whether you're working on a fractal time frame or a high time frame, right? You go and make a new high because you shift some structure point, right? Where is the optimal place in this zone you're going to take a trade if you're dealing in this minor range here? Yeah, it's all to do with your POI criteria, right? So you find what? The last sell before the buy zone, right? Below the flip zone, is it free of liquidity? Yes. And the final criteria you need to look at is, where is the liquidity left of POI? And it's right here. So the entry when price is going to come to is going to be 17.99. And when it hits it, you can see price just rips. Yeah. And now you've got what? You've got progressive order flow to the upside. Yeah. Anyone see this? Yeah. Now it's gone on and break high. So probably we'll get a retesting of the zone. Now that's why I've highlighted 17.99 over here. Yeah. We'll probably get a retesting of the zone over here. In Asia, the Asia low will be printed as future liquidity, and we should go and continue going up. Yeah, you guys can ask questions, by the way. Feel free to interrupt me. Somebody has a question, I think. Who has a question? Somebody wanted to ask a question. Please ask away. Yeah, unmute yourself. Yeah.
Yo, bro. I was just gonna ask. You see how you were talking about that internal break, the final break.
Yeah.
Relating that to time and price theory. Just recently, where you've mapped out before you said it rips. Would you personally? I mean, I know that you said that you were napping, but correlating time and price theory into that. I understand that it meets your criteria, but in regards to time and price theory, would you take that trade based on it being very late in the day? Because
yeah, we would. Yeah, we would. And that's.
Yeah.
I mean, what time is this right now? 5, 6 o'clock. It's a very important time, because when you're talking about daily candles and algorithmic time, right? A daily market cycle is only 4 points in time. It's the open for a bullish day, right? You can have. I mean, there's various ways you can build it, but you have the high, you have the low, and the close, right? that low of the day gets printed at a very specific time in the day, and it's normally 5, 6 o'clock. Yeah,
Right.
4 to 6 is a very important. 4 to 6 p.m. is a very important algorithmic time. It is. Yeah, because the low of the day has to be printed at some specific time. There's other variations of the daily cycle which happen in extreme moves where the low of the day can extend to 9 o'clock, but normally by the time you get into 4, 5, 6, you can expect, if you're at your appropriate POI, that markets will shift.
Okay,
You know?
cool.
It's very important. It's a very important algorithm, and that's why when people say actually trading in the late in the day, we don't do it. Well, they're not really understanding the market, right? How is it that actually the move within this day happened at 1 o'clock, right? I mean, if you're waiting for London or whatever, you miss those moves, right? Really, right? Unless you traded into US Open. So you really have to forget the common knowledge that's out in the industry. It's not true. Yeah, we've taken some trades like really late in the day. Even this trade at 1784. What time was this again? Look, 5 o'clock.
Yeah, it's at 5 o'clock. Yeah. Okay.
Yeah. So these facts, by the way, and again, we're kind of mixing concepts here. The first topic is structure. I mean, there's a lot to remember in trading. That's why even if you take a few days off, like we did on Christmas, you'll feel rusty because all of these concepts, it's just too much knowledge, right? And none of us, even myself at this point in the team, we're not at the point that we've got true mastery of the markets. We just don't, right? It will take probably another year for me to be really fluent in these topics. If you do chart a lot, right, and this does happen to me in periods where I do trade a lot, right, you will start feeling like you will start becoming competent, right? So in terms of a competency cycle, right, most people that are new to this team are going to be at this level. They're going to be incompetent. That's just how it works, right? Then you start becoming competent, where you still kind of have to think about some things, but the concepts become like, they become more fluid to you, right? If you keep doing it consistently, then you become competently competent, where you don't have to think about it, right? And the final level of that is obviously mastery, where it's second nature. Just like if I said to you, what's 1 + 1? It's 2. You don't have to think about it, right? Yeah, that's really the level you want to get it to. But obviously, if you take a break, I mean, you're gonna regress, and therefore this is a constant battle to be on the charts, really, right? But there's a lot of facts, right? When you talk about the daily cycle over here, even the trade over here, right? I don't know, most of you didn't realize this, but that trade that I sent when, and I know I was actually on the wrong side of the market here, but that trade that happened from the Sydney high and Sydney low, it happened at a specific time, right? I'm not going to go into Asia profile, but when we talk about the Sydney high and low, algorithmically, has anyone ever thought about at what times does the Sydney and high and low get liquidated? Because they will get liquidated at some time, right? Yeah. So if you look at what time this move set up, you can see it's 1 o'clock, isn't it? Yeah. Bear that in mind. This is a very important algorithmic time, right? Normally what happens is the market will open, right? For gold, it's 11 o'clock, right? 23. Okay. The first hour in the market is so pivotal because it's the first pool of liquidity that's created. Okay. So why do they do this? Is because they need that pool, they need that initial injection of liquidity in order to move the market into its next phase. Okay. So around midnight, you have the finishing of that creation of the Sydney range. Yeah. The market now has a decision to make. Does it go and take the high or the low? That's why you shouldn't, and I get caught up in this sometimes, but you shouldn't really take any trades before 1 o'clock. Yeah. Unless you're already managing positions, yeah, you shouldn't really look for any trades before 1 o'clock, because the algorithm will do what? It will try and liquidate one side of Asia from 12 to 1. Okay. And guess what happened? You had the Sydney low over here. What happened at 12 o'clock? Did the algorithm not push the low of Sydney? It did, didn't it? Yeah. Around 12:30, we liquidated the Sydney low. So this was the trade up. So at this point, this is a different kind of case. You have different kind of daily cycles and stuff, and on this day, the algorithm at 1 o'clock really failed to liquidate the Sydney high. And this was kind of a clue that we might have been heading down. But actually, the better clues to read here, because algorithmic trading you'll develop a bit later. It's more of an advanced intraday skill, right? But you can't get to that intraday skill point unless you understand actually the structure here changed because you had a change of character, right? If you alone recognize that and you had that confluence of time on your side, you would have had the sell-off, right? Now this is a different kind of day in the market, right? This is a one-side liquidation model, right? I haven't really seen this one in a while, but you can see in this case, you had the building of the Asian session range. London did what? Didn't really do anything, right? It didn't push the low or it didn't push the high. What did London do? Actually just retrace to the midline and push down. The only way you could have got this 12 o'clock trade, right, is if you were anticipating that you were going to have a bearish day. Now, why would you anticipate that you would have a bearish day? You have to remember that we're expecting a bullish month because the 8-hour time frame is now bullish, isn't it? It's creating 8-hour higher highs and higher lows. Let me reload this. So the 8-hour time frame right now is creating higher highs and higher lows. Yeah. So in order for us to get a bullish month, what has to happen is the same thing. Just like you have a daily cycle, you have a monthly cycle, right? So if the monthly is opened here and we're expecting a bullish month, well, the only way it can do it is if it creates the open, it goes and creates the low of the month, then it goes and creates the high of the month, and then it closes. Yeah. So all price is currently trying to do is create the low of the month before it goes and creates the high of the month. Yeah. And those are very important facts. And that's the only way you can anticipate that if you're going to have a bearish day in the market. Yeah. So if we're going to have a bullish day today, right? Where's price? So at 11 o'clock, gold's going to open somewhere here, isn't it? Yeah. We're expecting a bullish day. So what has to happen? Price has to do what? It has to go and create the tail, right? It has to go and create the low of the day next. Then it will create the high of the day, and then it will close. Yeah. But tomorrow we should get one-sided liquidation models anyway, because again, you've got external structure here. And again, over here, and this is why it's important to use cross-market and cross-time analysis, because on the 30-minute, it looks like there's Asia low liquidity in here, but on the 15-minute, actually there isn't. That's actually a true POI. Yeah, and again, your criteria for POI, again, last sell before the buy, which goes and clears previous external structure. Number two, it has to be free of liquidity, right? So you got equal lows here, you got trend line liquidity all across here, you got Asia lows here. So obviously that POI is valid, right? Number three, it has to be below the flip zone. So again, if you look at this section of price action here, whatever you got in this zone here, you got what? Support, you got resistance, you got support. So is that below the flip zone? Yeah, it's below where, and again, this candle over here hit the flip zone and it flew. So obviously prices come below that candle here, right? It took out all the early retail buyers that stepped in.
Yeah. Oh, sorry, can I just ask you what you mean by the flip zone?
Yeah. So if you guys review and that's why I uploaded last team call to review it. There are some
sorry.
There's some cool concepts. The flip zone is, again, it's an area where again, you will understand most trading is retail based, right? It's basically retail participants that are looking at, even if you're a hedge fund, right, a big institution, how do you trade the markets? The same way 99% of people do, right? The only difference between hedge fund managers and retail traders is hedge fund managers know how to manage risk, right? It doesn't mean they're using some crazy methodology that no one else knows about. Yeah. So how do they trade? You can go on YouTube this, right? They look at levels of support and resistance, agreed? Yeah. Or more refined, as they call it, they look at zones. So in this zone over here, where is the level of support and resistance in the market? You can see in this area, they would look at this key area here, right? Yeah. You got what? Support, resistance, support. So what would they say the zone is? It's a key zone, isn't it? Yeah.
Like a pivot point.
Yeah, it's a key level, right? So again, the first reaction that comes into that zone is where? It's at the flip zone, isn't it? So your POI, your true supply and demand, is going to be below the flip zone, right? So that's that area here is below the flip zone. Now you will say, why doesn't the market come in deep into the POI? Because it doesn't. The final criteria you have to have is, where does that sell to buy zone last grab liquidity? Like it grabs liquidity all across these candles here. The liquidity, the stop losses it took from these candles here, if I rewind it right over here, right, we go back, right? And price is building here, right? We play it forwards. When price does this, clearly that's institutional activity, right? So the reason why that candle is so aggressive is because stop losses got grabbed. And therefore, when price comes back, when price wants to shift again, where is it going to want to shift to? Where the banks are sitting, right? Yeah. And where how do you know they're sitting somewhere? Because that's the area where they grab stop losses to go and shift that high. That's following me so far. Yeah. That's why price doesn't have to be a magnet all the way down here. It just has to go into the zone where they're sitting. And how do you find that? Is the area where the last liquidity was grabbed. And the dollar index graph, you can see it here on the bottom of here, right? Last point of liquidity, right? That's why on dollar index, I'm analyzing that price will come and be magnetized 93.37, right? This is your final precision criteria, okay? If you look at the characteristic of price action as it's approaching your POI, does it make the case that a buy could happen? Yeah, it does. What's this? Equal lows, right? Yeah. Also a key note here, at the flip zone and a key flip zone, price will normally create liquidity. Yeah, and does it do that? Yes, it does. It creates equal lows, right? And you got the FU through it, right? So now all price has to do is change character and then the buy set up. And does price do that? Yes, it does, right? It clearly changes character. Yeah. Clearly changes character with the shift in order flow. 1 second, guys. Bear with me. Can you guys see my screen? No. Can you guys see my screen?
Yep.
Yeah, so at this point, right, I know I'm a bit out of rhythm, but what you really need to do, right, obviously on price, the first thing is the market understand where structure is, right? So we create a hour higher high, right? Where is next number 2? And I think I wrote this on your trading plan. This is it. Yeah? This is what we're talking about, right? So structural analysis. Does everyone understand? Gold has currently just made an 8 hour higher high. Yeah. We're trying to make an 8 hour higher low. Agreed? Yeah. Number 2, structural phase analysis. So this is slightly different. Okay. This is to do with the new models of price delivery. So which phase of the structural cycle are we in? So obviously we've gone on and printed a new high. This is what we call phase 5. Okay. Right. Now phase 5 has to shift in what we call phase 1. Phase 1 is all of this movement down to come back into external structure. Okay. What comes after number 1? Number 2. So number 2 is all about the characteristic as it's hitting your POI. And what's this? This is pre-phase 2, right? Into phase 2, which becomes the actual point where price hits your POI, and you don't expect this point in time to break because you're actually at your true POI. That's following me so far or not? Yeah. And then phase 2 does what? Phase 2 is supposed to change the character, right? So this is where you go in your order flow analysis, right? So obviously when price is coming down over here, comes over here, what does it do, right? You've got mitigation happening all the way across here, right? You've got this block over here, and what happens over here? Price breaks through that last buy to sell zone. So this is your external order flow break right here. Yeah, this is where prices change character. Okay, price comes down and does what? Now it changes character again. So this is your internal order flow break right here. Yeah, when it's coming down here, and this is the final shift. So you look for 3 shifts of order flow, and obviously then you're going back into the same kind of anatomy of an impulse, right? Where's the most appropriate area to enter the market here? You guys follow me so far? Yeah? Or not?
Yeah, it makes sense.
Yeah. So that's what it is. So yeah. So the trading plan, your POI analysis, we did that, right? Liquidity analysis. So yeah. So all of the later components of the trading plan are really kind of enforcing like your bias, where price is going to be magnetized to. Forget the indicator for now, right? But yeah, daily that comes a bit later. But yeah, so if price has shifted order flow here, you're at the end of phase 1, pre-phase 2, 2, 3 change character into 4. Then the expansion is going to come. Yeah. Once it expands, obviously have your TP1 here because that's a sensible professional way of managing your position, TPing at the previous high. But really, there's no reason why price shouldn't break through a zone and go up here. And that's where then the subsequent analysis of like where the Asia highs are sitting, where the pools of liquidity are, that really is where it comes to. And that's where you get, I mean, will price not break through the zone? Most likely. Yeah. There's no reason why it shouldn't. First of all, you've got late people who have bought into the sold here. You've got people that have sold here, right? Their stop losses are sitting here. Right. Then you've got Asia high liquidity, those trapped buy stop orders are sitting here. So you've got a bunch of liquidity sitting across here, right? And also you've now got people thinking this is a downtrend, trying to sell this thing here in the future, and they'll get taken out, right? So you've got market participant liquidity on all sides, yeah? Plus you've got the what? You've got the current weekly high liquidity here as well, okay? So you need to track all those liquidity pools. And then it becomes, right, where's the most sensible place this trade is going to swing to? I'm aiming for 1912 based on structure, right? That's where I think is going to go to based on the higher time frame. Currently, we're playing the higher time frame is weekly bearish. Yeah, we're playing within this leg over here, right? This reaction here is what? It's just a reaction on the flip zone. Okay, we are still bearish on the weekly, right? Probably to come down into lower levels, and you've got liquidity sitting here. Once price comes into this zone here, 1910, there probably is a sell-off coming on gold. And that's correlating again. Sorry, guys, my HDMI cable's bugging. For 1 sec. That's probably to do with also the future direction of the dollar index. There would be. Any questions about that, guys, or not? Well, I fix my cable.
If gold comes down to where you're looking to take buys from before 1 o'clock today, would you still take it or no?
Yeah, you've got to be flexible in your approach, and it's not a rigid thing. But again, what you're talking about now is more like intraday stuff and how you plan your trades. But again, market is gonna do what? So if it opens there in half an hour, it's gonna do what? It's gonna, the opening price of the day will be what? Probably 1801, right? It's gonna from 12 to 1, it's gonna do what? It's gonna create this box, yeah, of liquidity. Yeah, I don't know how it'll print that box. I'm just theorizing. Let's say it's over here, okay? Let's say you've got a pool of price action here. Well, obviously we're expecting a bullish day. So what does price have to do? Go and print the low of the day. Yeah, that liquidation will happen at what time? It will happen from 12 to 1. That's just how the algorithm moves. Yeah, and by the time it comes up into 1, 2, 3 o'clock, that important algorithmic time, that's going to be the definite low of the day, right? Into this POI here, and then you will go and expand the high. Yeah. You guys see that? Open, low, then you make the high and the close. Okay. Yeah. Also, correlate this with Euro USD. Why is gold going to go up? I mean, what happened to Euro USD today? Again, I don't trade Euro USD, but again, it's important to look at if you trade something like gold, because it actually enforces those concepts. Again, I'm not lying. Look at the area Euro USD is tapped into. It's not 50% of this block, right? It's none of that nonsense. It's the area where last point of liquidity was sitting here. Is roughly come into that zone. Yeah. So if Euro USD is stabilizing, gold is stabilizing for buys, and obviously dollar index has come back into its external structure here. Yeah. You could have caught this sell today on Euro USD, truth be told. But again, you got to recognize, and again, my chart is not labeled because I'm not really actively trading Euro USD like that. But you have to label when prices hit, right? You have to actively label what point in time is presenting the structure, not like just like me have these like red and white dots because they don't mean anything, right? Is it 4-hour structure? Is it 8-hour structure? What time frame? It's probably 4-hour, isn't it? Yeah, because 8-hour starts compressing it too much. It's probably 4-hour or 3-hour, 2-hour. Yeah, this is what? This is a 4-hour high. Yeah. So what does that tell you? Tells you something important. Remember what's part 1 of your trading plan? Structural analysis, right? So if you've got a 4-hour higher high over here, well, you know, and look, the same principle happens here. The same thing happens here, right? If you look at the structural analysis here, so you got what? Higher high, higher low. What should have this done? It creates a higher high. So what happens here? That consolidation gets broken down. That's your change of character, isn't it? Yeah. At that point, did the market not change from bullish to bearish? Yes, it did. Yeah. This is also your external order flow, right? Yeah. Over here, you have the internal shift and then the final shift over here, and that was the entry. Yeah. And again, what time was that entry happening? 9 o'clock. People say don't take trades late in the day, but I mean, trades happen all the time, guys. The market's in movement 24/7. It doesn't just stop moving because it's 7 o'clock. Yeah. If you can read the intention, the time of day doesn't matter. Yeah. Up in here. Yeah, see, look, 12 to 1. You liquidated the Sydney low right there. Yeah. Are you guys following me so far or not? Yeah.
Yeah.
In this section here, have you got characteristics of a shift happening? Yes, you do. You've got building up of liquidity. So what's this? Pre-phase 2A, right? It's your shift ideas, right? Pre-phase 2A into 2. Yeah. Changes the character right here, right? And you got what? You got the trend that was building here on 1 minute time frame, right? The internal trend here was higher highs, higher lows. You can see this. Yeah. What happens to this trend at this point over here? It's supposed to go and clear that high, creates a lower high, and actually breaks down over here. And that's the shift on this leg now as well. Yeah. Those are the ideas that are in play. And obviously the target for this, if you're in the cells, you got to think what, right? I've just made a 4-hour higher high. What am I trying to make? 4-hour higher low, right? What phase is the market in? Because again, number 2 of your trading plan is what? Structural phase analysis, right? So it's create a new high. This is what we call phase 5, right? The building of the new external high external point. What phase is the market in now? It's in phase 1, right? Phase 1's purpose is what? All I'm referring to is this diagram. I'm going to draw that up for you guys here, right? All I'm referring to is this diagram here, right? 4, 5, 1, right? This is pre-phase 2, right? Into what? 2, 3, 4. Okay. Yeah. Where are you on that structural phase diagram? Yeah. Where are you right now? Right. You're in phase 1 clearly. What's the purpose of phase 1? We'll come back into external structure. Where is external structure for us? Where is external structure, guys? External structure, again, to find the external structure, you've got to find your area of true demand in this case, right? Because it's buy side. You got to look for what the last sell before the buying happened. Is it free of liquidity? Look, Asia low, liquidity, liquidity, liquidity. Is it below the flip zone? Yes, it is. Because look, resistance, resistance, support, 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 etc. So yeah, that POI is, where's the last pool of liquidity is right there. So that's your final precision zone right here, right? Cuts it dramatically, doesn't it? Yeah, from there to there. I mean, I'm okay with that 7 pip stop loss, to be honest. You can refine it further here at the entry zone, but that's an okay stop loss anyway, without even price action coming there. Yeah. And what does price do today? It just melts, doesn't it? Goes and tests the midline and just melts, doesn't it? Yeah. Let's follow me so far or not. Yeah, look, and again, look at the characteristic of price action here. What's this? Pre-phase 2A. It's the building of internal liquidity, isn't it? Yeah. Can price go and change character? Yes, it can. Okay, there's a change of character here. Yeah. So that's your external flow break. This is the internal shift here, and then you got progressive flow. Yeah. Price may come and I mean, it could just react off here, truth be told. This is the structure point here now. Yeah. Doesn't have to be more complicated than that, guys, but you obviously have to label everything, right? And again, you can use what's happening on Euro USD as a confluence of what's happening on gold, because they are heavily correlated. That's why I have Euro USD up. It's not from a trading perspective. I'm not really interested in trading Euro USD. It's too slow for me, but you know, some of you like to trade it because of your tight stop losses, but you can correlate it. So if dollar index is stabilizing on external structure, Euro USD stabilizing on external structure, most likely this is the external structure point for gold, truth be told. Yeah, that's how you got to work the charts. You can't just look at one thing, because you won't have enough justification to frame your trade just based on one idea. You got to use cross-sectional, pair analysis. Yeah, for GJ, I mean, I haven't looked at GJ because it just flew 600 pips and we missed that trade on the buys. But you know, GJ, well, what happened to GJ today? I don't know. I haven't even looked at it. You know, some of you guys are trying. I mean, sold off, but what? It sold off, okay, right? 60 pips, but in the overall context of what you're talking about, guys, you got to understand what's the structure story right now. I mean, what's the structure story right now on GJ? It's making higher highs and higher lows. There's no reason why any of you should be looking to sell GJ here. It doesn't make no sense, truth be told. What's here? Equal highs relatively, right? And again, if you look at, and I know the new guys don't know about this, but the yen basket, yeah, what's the structural analysis? What's the structural story on the yen basket? It's creating lower. It just made a lower low, lower high. That low is going to get run. So there's yen weakness. Is significant. The yen is weak. Yeah, you can't ignore number one of your trading plan is structure, right? It's very important. It's very important. Yeah, and again, if you're looking at GJ, I'd be trying to hunt buy opportunities more than sells, more than anything. Really. Where did GJ come to? External structure here, didn't it? And then you had the shifting of order flow here. We missed this trade here. That's why I haven't been bothering to look at it, because it's gone. Unless you want to struggle away trying to find like mid-range trades. You can do it, but mid-range trading, guys, is not the easiest in the world. So it's not. Yeah. Where is GJ on its current structural cycle? Like on this diagram here, right? Where is GJ on this diagram here if it's just made a new high, which is phase 5, this is phase 4, right? Look, pre-liquidity over here, pre-phase 2 into 2, it did all that change of character business. Where is it on the cycle here? It's here. It's in phase 4. It's trying to make a new high. Why are people trying to short this? I have no idea. Yeah, and again, you're trying to short it here. Like, is this not a trap? Are they not making you see a downtrend here because they want you to sell at this POI here? Of course they do. They'll even want you to sell at this POI and this one and that one. Until what? Until you get these reactions, induce people in, build that equal high liquidity and take it through. Yeah. Even happened here. Like, look at this POI here. Look what happened there. Reaction, inducement, push through, right? Even at this POI and this FU candle here, reaction, induce people, push through. In this POI here, reaction, push through. It's going to happen all along here. But look, there's so many Asia highs here. Obviously, as time goes on, you won't see the Asia highs here because, you know, they're not going to be visible. Like, too much time has passed on. But look what's sitting here, Asia high, right? You got a bunch of liquidity scattered all across. Even the high here is a double top Asia high complex. So I'd be very careful trying to work this into a sell. Truth be told, you can take intraday trades. Obviously, if it makes a new high, you know you're trying to trade down to some point right here. But obviously, this is very high in the range, so these trades become very difficult. And again, these Asia lows are being left for when the drop does happen, and once GJ does make its next weekly higher high, because that's what it's trying to do here right now. Yeah, it's trying to go and print its new weekly higher high. Probably the level I'll be looking at is 162. Truth be told, it's got another 700 pips, but even that's an equal high. So actually, even GJ could really go push into 170, these levels here, right? 50% of this area, supply and demand zone. It's got a way to go. Yeah, but from a structural perspective, GJ is not. It's not in a sell dynamic on a higher time frame. It's actually in a bullish, like, structure. Yeah. You can correlate this. Is US 30 pushing up? Has anyone been trading that thing? I'm sure it has. Yeah, US 30 has been pushing up. The stock market is heavily bullish at the moment. Yeah. You guys follow me so far or not? Any questions? Any questions, guys, or not? So key points, and again, key points for me more recently, right? You've got to notice not just like what structures are being built, but also the intention which prices break it through previous zones. So you can see over here, like it breaks through pretty strongly, right? So when price breaks through 1832, well, let's hope it does. You know, we want to see how does it break through? Does it wick through the zone? Right? If it wicks through it, then it's a different idea in play. Then you're looking for a reversal trade because it hasn't hunted enough liquidity on this run down to continue the momentum higher. But if it breaks through with firm momentum, then it has several different complications depending on the higher time frame perspective. Yeah, for example, like over here, it broke through with very strong like momentum here, so that's why it didn't really hit the external point over here. It just decided to continue on. Okay, but you have to keep in mind of the higher time frame picture, even though you got some immediate kind of time frame. I've not lost track of actually we're in a bearish environment here. Yeah, lower high, lower low, right? We're still playing within this leg of price action here, right? Until this breaks here, like until this breaks here, you can't be bullish on gold. And even if it breaks here, even if it goes and prints a new weekly high, it will still come down and print a weekly higher low to push higher, right? It can't just break through weekly structure points, create a new high, and off you go. Yeah, unless it's a really strong break through that weekly zone, then you'll still get a sell-off into a mid zone, back into structure, but it won't be the into extreme. Yeah. You guys follow me so far or not? 12 to 5 on certain daily cycles is very important. If you notice 12 to 5, particularly on one side liquidation models, the moves will happen from 12 to 5. So this range is, I mean, this time zone from this 5-hour window is really important. And that's why you can look for reversal trades, because the low of the day is going to be printed on certain times of the day. Yeah. Any questions, guys? I don't know. I'm hoping gold retests 1800, truth be told, because this is the range we're playing in now. From this last sell to buy zone to the range high now. There's liquidity being built across there. So yeah, we'll see what Sydney does. And then obviously if it liquidates the Sydney low, then obviously the only liquidity left is obviously this equal high is being generated. There's clues being left everywhere about where the future direction of the market is going to go. You just have to be able to read them and see them. And that requires that you lock in, right, with what's going on. Yeah. I think the market's about to open in 9 minutes. So again, you shouldn't really take trades from 11 to 12 on gold or 10 to 12 on FX. But the reason isn't because it's dead time, is because you need to allow the highs and low of that Sydney high and low to build. Obviously at 12, the algorithm starts in this liquidation cycle. It will liquidate either the high and low. The reason why I say don't hunt for trades before 1 is because you don't know if it's going to run out the high or low. Yeah. Now our suspicion is it's going to run out the low. Why? Because we're expecting, if that's the open, the low of the day to get built here, right? So our suspicion is the low will get run, right? Why would that the suspicion be? Because they want to leave the Sydney high, which is also the current Asia high, right? Current 8 high, right? That leaves that pool of liquidity later to get run through. Yeah. You guys follow me so far, right? Then there's a thing, right? If within Asia, right? Let's say you're building the Asia range, right? Obviously, when price is coming down here in a downtrend, if within Asia, this trend shifts, okay? Yeah, like it shifts that trend over here. Well, then price is just going to go like this. It's going to go, it won't give you a deep test of the midline, right? Do you know on certain days you get, when price leaves Asia, you sometimes get like shallow tests. They don't really test the midline, right? And on certain other days, price gives a deep test of the midline. Why is that? right? So within, if in Asia, if Asia does this, right, and it doesn't negate the previous trend coming down here, right? And let's say you're at 7 o'clock, right, and it's ended, well, and price decides to leave here, well, you haven't really negated that previous lower high pressure, so you'll get a deep testing of the midline, right? But within Asia, if the trend coming down here has been, which is a downtrend, gets negated in Asia itself, well, then price, once it leaves Asia, will only give you a shallow test. It won't give you that deep pullback. But those are more advanced kind of structural daily cycle concepts, and we'll go into that more and more. But you'll see that. But I don't really want to go into daily cycle stuff today. We kind of started going into it. The first thing for everyone to understand, right, when we're going to get back into our rhythm of trading, is one, understand structure, right? Number two, understand which phase of that structural cycle are we in. Can we define our true external points? Because if we can't define our true external points, I mean, we've got no hope, because then you're trying to buy every POI. Yeah, you guys follow me so far or not? You gotta be able to find where the true external points are in your price action models, because that's where when 95% price will shift into a new expansion cycle. Yeah, you guys follow me so far or not?
Yeah.
I need to lock in again. Again, intraday trading, you need to be in a certain kind of precision to be able to do intraday trade, guys. It really isn't something you kind of let go for a while. I've not done it in a while, truth be told. I've not really been interested in doing it, because again, it's a very specific skill set, and it requires you to be very locked in, yeah, and have specific kind of understandings of the market, and we'll go into that. Yeah, so, but again, guys, you don't have to intraday trade all the time. If you're weak, and again, if your week doesn't allow you to intraday trade because you're busy, I mean, you shouldn't be intraday trading. If your week only allows you to take the external structure trades, so be it. Yeah. Intraday trading can be really rewarding, because you can take apart all moves. And what you really should do is, once we do a few more sessions, again, recapping some of this stuff, you need to go and apply it every day. Be like, okay, what happened to my Sydney high and low? What time did they get run, right? Yeah, and I'll give you in the next call we'll probably do another one this week, as we build on the knowledge base, right? And we all get ourselves into that kind of more rhythm in going into January. But we really have to understand, like, okay, the Asia high was built at what time? The Asia low was, okay, right? Even here, guys, there's a trade. Like, when you're intraday trading, there's a trade here, and there's actually a trade from 5 o'clock till set. On certain daily cycles, there's a trade from 5 till the Frankfurt hour. There really is. Yeah. Yeah. There's certain trades that you can take, right? If you really want to intraday, and there are ways that you can take all sides. Yeah. But that is a more advanced skill. I can't go on the first session on 2022 be like, let's talk about intraday trading, because it's very specific. Yeah, but you should definitely, regardless of whether you want to intraday trade tomorrow or not, right? Because again, most of you won't have that knowledge yet anyway, with all the timings and stuff. You should definitely be able to appreciate what kind of day you're building. Okay, are you building a bullish day or a bearish day? Right? If you're building a bullish day, well, obviously, price already gives you the opening price when it resets the day, either at 10 o'clock for FX or 11 o'clock for gold, right? It already gives you the open. Then it's about knowing, if you're in a bullish day, what's the sequence of events in order to print those 4 landmarks in time: the open, low, high, and close. What's the sequence of events? Most likely, once you're on a bullish day, what happens is, I mean, there's 2 versions of events. I'll give you both of them, right? There's two ways that this can happen, okay? The first, there's one of these ways is more common than the other, okay? You got to know that as well, right? So the first way is you'll have the open. What price will do is do what? From the open, it will go and do what? It will create the temporary Asia high. Okay, this is what we call a T high, right? The reason why it's called a temporary high is because this will get built around 3 a.m. Yeah, but it's not going to be the high when the day finishes. It's just a high that gets created within Asia. What's the reason for that? It's a pull of liquidity for later. right? And this is the more common version of events, by the way. So once the temporary high gets created, you have the A, which is also the current Asia high. Price will then go and do what? Create the Asia low. Okay, so now you've got what? You've got 3 landmarks in time, but the only one that's really set in stone is the open. Yeah, everything else is going to interchange in that day. Yeah, so what does price do then? It will then leave the Asian session range, right? And what will Frankfurt do, right? Towards the end of Asia, basically around 5, 6 o'clock, price will do what? It will trend up into 7 o'clock into Frankfurt. Okay, now, how do you know which side is going to push? You'll ask me, how do you know Frankfurt is going to push either the high or the low? It's all to do with understanding that actually you're trying to print a bullish day, and in a bullish day, the most common sequences of events really from the open is that you have to go and do what? Price has to go and print the low. Yeah, we haven't really printed the low yet. All you've got is a temporary high. So the course of events is Frankfurt will raid that Asia low. Yeah, and this is where it becomes even more tricky as well, right? And there's 2 versions of events here as well. Okay, number 1 version of events is the low of the day can be printed in London. Yeah, London prints the low of the day. Okay, now when this happens, this doesn't normally happen. The reason why is because they like trapping people in London thinking, oh, ICT said London creates the low of the day, and that's where we should get the push. And what actually happens in the more common version of the event is you'll get the London high and low, and London US cross at 12 o'clock will run out that London low. Yeah, and that will be the true low of the day. Yeah, the TL, the true low of the day. Yeah, what will happen when this happens, by the way, when you see the sequence of events, right? This is one of the most highest probability buys in the market, because you have not only got the London high liquidity here, you've got the Asia high and the Sydney high liquidity sitting there, right? And then price goes and creates a true high of the day, right? And then price will close. Yeah. But in order to see the market like this, guys, you have to, when goals open, by the way, you've got to understand the market. Go back to the basics. Yeah, like in order to understand these rules and to be able to see the market like this, you've got to have some solid foundational graphs of structure. You do. Yeah. There's no way you can do intraday trading like this if you don't understand how structure is building, because this is like the end. This is like the end game of it all, right? And again, this is the most common version of events. And it's the most complicated variant, right? The least common is when you have the open, right? Price will do what? It will simply create its Asia high and low, right? And it will trend down and create the low of the day. Yeah, and it will then go and create the liquidity, the high and close. Yeah, you won't have this complex where it creates a temporary high. It will go and simply trend down. The Sydney high will be kept, and you'll just go down, create the low and the high, close. Yeah. This could have even been made easier, but they could have just simply said, well, we want to have the London to create the low, but they make it even more complicated, right? And this is all to do with if you're in the true supply and demand zone. Yeah. In this version of event, what they will do is when price is hitting your POI, it won't quite hit the real POI it needs to hit. It will just be above it at the flip zone. Okay. And then when London closes, right, it will liquidate into the true POI, and then you'll look for the shift of order flow. Yeah, I'll try and find more examples of these as we go on in the month. But is that making sense, guys? We'll do a whole session on intraday trading, truth be told, once I get back into some rhythm, and you'll have models of all of these things. But these are some rough rules to remember. Okay. Yeah. Any questions about that? Don't get worried about too much. We'll go more into this. If you are interested, there is a video on our YouTube channel I think I was teaching Christina some of this stuff, and it kind of goes into the start of this. You guys follow me so far or not? Anyone? You guys hear me?
Yeah.
Yes.
You're all very quiet. Guys, this stuff is not easy, right? It's going to be complicated, but we really need to engage with each other because I don't really know. I mean, I can try my best to guide you all, but at the end of the day, you will have to engage with the process because, again, guys, I'm not perfect, as today showed. As much of a refined trader as I am at this point, like I'll get stuff wrong still because there's certain facets of trading. Like I can't have mastered it all yet. Do you know what I mean? Like there are still certain things that are not second nature to me. So you need to find what's this? Yeah. So I don't think gold really is interested in coming lower the way it's reacting. Can you see that? Yeah. So it's important if you're going to intraday trade, it's very important to mark out no matter what. That was the opening price. Yeah. And what is it trying to do? Where is the Sydney low and high going to do? Even if you don't trade at the moment, yeah, just take an interest, right? Mark all these landmarks out. And again, you don't need to watch the charts for months and months to build a portfolio in your mind of how things play out. I guarantee if you watch the charts for 2 weeks, I know maybe you follow 3 pairs, right? And you follow the daily cycles of those pairs, you'll notice similar things that I'm talking about. Yeah. Obviously, right now, you don't know the specific times when things happen. I've kind of alluded to some of them. Okay. So the first important time is this, right? When you have the Sydney high and low, right? Let me put SH, Sydney high and Sydney low, right? For FX, this is 10, right, to 12. Okay. Right. For gold, this is 11 till 12. This box that gets created. Okay. 23. Excuse my writing, guys. I'll try and make it neater next time. But from 11 till 12, right? The first important time that you need to understand is the algorithm at 12 o'clock will take one side of liquidity. That's just how things happen every day. You can backtest this. You can look at every chart. This is a repeatable phenomenon in the market. It will not change till, I mean, in our lifetimes, these facts won't change anyway, because it's the same banks and the same kind of 5 centers that control the markets, right? So at 1 o'clock, I mean, either it will take the high or the low, right? At 1 o'clock. That's a key time. Yeah. Okay. That's a key time in the market. Okay. Now, once it creates the high and the low of the session, liquidates one side, it needs to go and then print the high and low of the Asian session. So just like the daily cycle has those 4 points, right? The Asian session range itself, right, has those 4 points in time, right? It has the open, right? This might be the liquidation time, but it might not be where the high of the session is created because price might keep pushing into what? 3 o'clock. That's the high of the session gets printed at 3 o'clock, roughly around there in the morning. Okay, yeah. Now, once it does that, it's obviously done what is created the open, which is right here. It's created the high. Now it needs to do what? It needs to go and create the low, doesn't it? Yeah, the low of the session will often be created and it will finish creating around 5 o'clock. So this is what we call Asia range expansion happens. Okay, you got the open there, you got the high, and you got the low of the session. Okay, then obviously it needs to close. Agreed? What time will it close? 7, right? Yeah. And then that point, what happens at 7 o'clock? Frankfurt comes to life, doesn't it? Yeah. And then which direction Frankfurt will raid the market, whether it will take the high or low going into London, is all to do with what? You guys tell me. What's that to do with?
What the daily candle's trying to print.
What the daily candle is trying to print, right? Yeah. So on Euro USD today, for example, if you're expecting a bearish day, which side did Frankfurt raid liquidity? Anyone? Which side did Frankfurt raid liquidity? It raided the downside, isn't it? Yeah. It's kind of a different thing. This is a one-side liquidation model, but you know, these are the rough ideas in play anyway. So if you're expecting a bearish day, you would, and again, the example in Euro USD is only when one side of Asia got run. I'm talking in the context when both sides get liquidated. You guys follow me so far? Yeah. I'm talking about a model of price delivery. We're going to have to deal with 2 problems here, right? There are certain days when one side of Asia gets liquidated, and there's certain days when both sides get liquidated, right? I'm talking about the sequence of events as it pertains to when both sides get liquidated. You guys follow me so far? Yeah. In this example of Euro USD, you've got one side being liquidated today. Yeah. Yesterday, you can see this. Look, at 7 o'clock, what did price do? It rated the low, didn't it? And again, in this example here, the low of the day was made where? In London, wasn't it? Yeah. Did we have London being liquidated? No. The reason is because Euro USD actually hit its true POI. It's all to do with, and again, this is more like advanced kind of trading, but you can see that last pocket of liquidity there. In London, we actually hit the true POI, and therefore there was no reason for US to liquidate the London low. Remember this diagram, where is it gone? I got rid of it, didn't I? Yeah. When I said when the low of the day can either be printed, for example, here in this example on Euro USD over here, right? You can see clearly, we can all see on this day, both sides got run of Asia, agreed? Yeah, objectively, both sides got run. Yeah. Yeah. So in this day, what happened? The London low created the low of the day, right? Obviously, you can see here, look, you got the Sydney in orange, right? What happened here? 12 to 1. Look, I'm not making this up. These are facts in the market that are so powerful. If you can get a grasp of these concepts, honestly, the world is your oyster. Look, 12, 11, 10 till 12, we made the Sydney range. What happened from 12 to 1? We raided the high of Sydney. So what was this now? What was this, guys? What was that landmark? More importantly, what was that landmark? This was a temporary high of the day. Remember, you're talking about the daily cycle, aren't you? Right? You're talking about moving between those 4 mark points in time. The open for a bullish day, you want to create the low, the high, and the close. Right? What did I say? That's obviously the uncommon version of events where it goes from the open to the low to the high to the close. The more common version of events is what? You get the open, price does what? Creates the temporary high, right? Then it does what? Goes and creates the low, yeah? True low of the day. It goes and liquidates that high over there, right? The temporary high. It closes, it creates the high of the day and then closes, yeah? Is that not what happened here in this version of events? You have the Sydney range, so you have the opening price at 10 o'clock here, yeah? Over here. What did price do? Created that range, pushed up, created the what? Temporary high, right? Did what? Created Asia, right? Created a temporary low. That got pushed down into London, right? London then pushed up into the high of the day, and then you close price. You guys follow me so far? Or not?
Yes.
Yeah. These are complicated models, by the way. Don't bog your head down with the details. I think we'll do another call this week, but on this stuff. But it's good to start getting your mind thinking in that algorithmic way, right? Because if you can start making your mind think in an algorithmic way, you'll be better suited to what's about to unfold. Yeah. Why is there's no other justification why gold is buying up right now. It's not purely to do with a structural reason. It's not. What are the factors that are, and what I really got to get everyone to start thinking, right, is what's the reasons why price is moving up or down? Because we all agree none of it's none of it's fluky, is it? It's all because of some factors happening, right? Yeah. What are the components that's causing price to go up right now? Number one, time of month. Yeah, where at what time of month, right? That's number one. Right, and these are factors in every kind of month, right? None of these concepts will change whether you're in January, February, March, April, May, right? At the start of every month, you got to know where is price in relationship to the current structure. Is it going to be? Do you hypothesize a bullish month, or do you hypothesize a bearish month? You guys follow me so far, or not?
Yes, I'm following.
Yeah. Are you going to have a bullish month or a bearish month this month? That's very important. Now, we all agree because of the AI. How do we arrive to that conclusion that are we bullish this month or are we bearish? How do we arrive to that conclusion? Well, the answer to that, the same answer arises for, are you going to have a bullish or bearish day? It's the same answer for, are you going to have a bullish or bearish month? The answer is all to do with structure, right? If the structure leading into the new month is what, bullish, you're going to expect a what? Bullish month. Agreed? Yeah. So at the start of this month, prices at the high of a new structure point, we're expecting a new month. So what should happen? We should, once we have the open of the month, we should do what? Go and create the low of the month, then the high, and then the close. That's how price sequence is. Does it not? You guys follow me so far or not? Yeah. Okay. I lost my track of thought, right? But anyway, right. So that's one of the components of what price is moving up. Number two is to do with structure, okay? Because obviously we're in a bullish structural cycle and we come back into external structure, etc., etc. Number three, the other factors that are in play here is all to do with the intraday stuff. Yeah. But again, this is like advanced stuff, because you really need to sit down and have all of these things noted. And it's not about just having them noted in your textbook. You actually need to be able to recognize these things in real time, which takes a bit more practice. Yeah. Like you had to recognize on gold today, you were in a bearish state. That's the only reason why these trades work. Once you recognize that, then it's pretty straightforward. The sells here, it's not complicated. It's all based on picking the right POI above liquidity, like the last buy to sells and liquidity left of that pocket, time 11, 12 o'clock, London US cross, because you're confident that you're in a bearish day because of what? Structurally, you made a new high. You're in phase one of that structural phasic cycle. So you have to be fluid across all those concepts in your trading plan. That's the only way this works. This looks very simple, but it's very complex in its execution, okay? But we will get there. But today, I think I'm gonna end the call after taking some questions, but we really focused on structural analysis, okay? And I'm gonna go more in this in the next few calls. We kind of went into the structural phase analysis, right? I'll go into this model a bit more in more detail about okay, this is phase 4 into the phase 5 that builds over here. You've got building of liquidity, changes character into phase 1, comes over here. This is your pre-phase 2 into phase 2, etc. I'll go into more in the phasic model of delivery in the next call, and then we'll build on those ideas into the intraday concepts. Okay. Yeah. That's what we so far or not. So price at the moment is doing what? It's creating a temporary high, actually. Yeah. It's opened over here, it's creating a temporary high. So most likely, if you're going to have a bullish day, sorry, it at a certain point might come back down here to create the low of the day before it goes on and creates the high of the day. Yeah. Or you might be in the other less variant model of this, where you got the open, it just goes and makes the high, but it doesn't really happen because they need to generate pools of liquidity to move price. So we'll see what happens anyway, but you can start tracking this for yourself and see how things play out. That's the first start of this, is the recognition phase. Once you can recognize things over and over again, trust me, you can intraday trade days. There's days on our old Telegram and where I've taken every move on the day. It can be done, right? But in order to build, and look, gold is starting to drop. And all of this really requires that you think through, number one, again, what is structure doing? Where are you in the phase, right? And number three, if you're going to intraday trade, do you have an understanding of how that daily cycle or the daily candle gets print built? That's all you're doing. That's all the daily cycle is. It's the movement of price between the open over here, right? The low, the high, and the close. That's all it is. Yeah. Do you understand how gold today is going to move between these 4 points? Yeah. It's opened over here, right? It looks like it's created the high, but it's not. This is just a temporary high. So what's it going to likely do? Create the temporary low in Asia, get liquidated in London most likely, and then rip up. Yeah. Any questions, guys? Or not? Any questions? Anyone? Any of the new guys, any questions? So yeah, we'll build on this week, guys, truth be told, because I do want to get back into more of an intraday mindset. But yeah, we'll do it on the call in the next couple of days. So I hope that was useful, guys. Just, yeah, you should be able to follow along now and start building your own ideas. It's nothing, I mean, trading, guys, is very straightforward. Structure, which phase you're in, your POI, right? Can you select your correct POI? And obviously, if you want to intraday, then where are you in your intraday kind of daily cycle candle structure? That's it, really. But you don't have to ping pong, you don't have to intraday trade to make money. You don't. Yeah. It all depends on how your current week is set up. If you can be on the charts, because when you intraday trade, you need to be on the charts every 3-4 hours, because at times the trends where the open goes to the low changes every 3-4 hours. Yeah. All right, guys, I'll call it time there. Aaron will upload this team call onto your educational page, and you can review it there, I guess. But yeah, thank you all for attending. Happy New Year again, and I'll catch up with you guys and girls, very soon. Cheers, Aaron.